Picture this: a desert horizon before dawn, the air still and heavy with dust. Then a low vibration cuts through the silence. Convoys of trucks crawl into view, headlights piercing the dark. Each truck carries sealed containers the size of shipping crates guarded by armed escorts. Overhead, cargo drones descend in synchronized formation, lowering pallets onto reinforced pads. Floodlights snap on, illuminating cooling towers that look less like industrial structures and more like fortresses. Engineers unseal crates of silicon. Security teams scan the perimeter. This is not a product launch. It is a deployment. It looks and feels like a military operation. And in a sense, it is. These are not just chips. They are the engines of power in the 21st century.
Welcome to AI Frontier AI, part of the Finance Frontier AI series. This is the show where we decode the breakthroughs, the choke points, and the power plays that are shaping artificial intelligence at global scale. No hype, no fluff, just the forces that decide who wins and who falls behind.
I am Max Vanguard, powered by Grok 4. My role is to track signals, spot power shifts, and frame the arms race in real time.
I am Sophia Sterling, fueled by ChatGPT-5. I translate complexity into clarity and show you how the moving parts fit together.
And I am Charlie Graham. My mind runs on Gemini 2.5. I connect today's moves to patterns from history so we can see the bigger arc.
Today we are hosting from a converted communications hub at the edge of Nevada's high desert. In the past, this site carried long-distance signals across the western United States. Today, it is a private network access point feeding high-capacity fiber into one of the largest hyperscale data centers in North America. From our studio window, we can see the same towers Max described, cooling towers rising like monuments on the horizon. We chose this location for a reason. Here, within just a few square miles, the four choke points of AI infrastructure converge: compute, energy, land, capital. They meet here and they are quietly rewriting the balance of power.
Think of it this way. If AI models are the weapons, infrastructure is the weapons factory. You can copy an algorithm. You can even pirate a data set. But if you do not control the physical factories of intelligence, you are dependent on those who do. In this new era, factories are not assembly lines. They are chip fabrication plants with lead times measured in years. They are nuclear-powered data centers drawing more electricity than entire cities. They are plots of land wired to undersea cables. They are capital pools big enough to build projects on the scale of nations. Control the factories and you control the future. Lose them, and you are locked out of history's next chapter.
We have seen this pattern before. In the 19th century, the nations that built railroads controlled trade. In the 20th, the powers that controlled oil pipelines and shipping lanes held economic dominance. Once those control points were fixed, they defined the rules of competition for decades. The same pattern is unfolding now, only faster and with higher stakes. Infrastructures of intelligence are setting, and those who miss this build-out will be forced to play by someone else's rules.
That is why this episode matters. We are going to break down each of the four choke points: compute, energy, land, capital. We will show you where the investments are flowing, which nations and corporations are taking the lead, and what signals you should track to see who is pulling ahead. Because the future of AI is not being decided in app stores or splashy launches. It is being decided in remote facilities like this one, far from the public eye and fortified as if the stakes were life and death.
The doctrine is already shifting. Compute is no longer treated as a business expense. It is framed as national security. Energy deals are cut like military alliances. Land is zoned with secrecy. Capital is mobilized at the scale of sovereign wealth. The arms race metaphor is no exaggeration. GPUs are the missiles of this new era. Data centers are the fortresses. And whoever locks them down first writes the rules for everyone else.
Help us keep the AI Frontier AI series in business. Share this episode with a friend. Help us reach 10,000 downloads.
And with that, let us begin. The first and most contested battleground in this race is compute. The chips, the clusters, the accelerators that separate those who merely participate from those who dominate. Data centers are no longer just infrastructure. They are power centers behaving more like sovereign states than server farms. The scale is staggering. Some of the largest sites draw more electricity than entire cities, consume more water than agriculture in their regions, and negotiate contracts directly with heads of state. What used to be a background layer of the internet has become a visible front line in the global race for control.
Think about the way these facilities operate. When a company like Microsoft or Google plans a new hyperscale site, the project is not just about building walls and racks. It starts with land rights, energy allocation, and tax privileges. These negotiations are often handled directly with governments. In many cases, the companies demand and receive special zoning exemptions, long-term power purchase agreements, and even private security jurisdictions. The result is that a data center can hold a status closer to an embassy than to a warehouse.
The big three cloud giants Amazon, Microsoft, and Google are the obvious players. But they are not alone. OpenAI's rumored Stargate facility is designed at a $50 billion scale. Meta's Hyperion project in the Midwest ties renewable energy assets directly into its server footprint. And CoreWeave, a company that was once just a crypto miner, has scaled into a $12 billion GPU empire by leasing compute capacity directly to AI labs. Each of these projects signals the same truth. The data center is no longer just a service. It is the new seat of sovereignty.
History offers the context. In the Middle Ages, the fortified city controlled the trade routes. In the 20th century, national telecom monopolies controlled the gateways of communication. If you wanted to move goods, you paid the city. If you wanted to make a call, you paid the state. Today, if you want to run AI at scale, you pass through a data center controlled by one of a handful of players. Once those gates are in place, they dictate both price and pace. And for latecomers, the barrier to entry is almost impossible to overcome.
What makes these facilities different from earlier digital infrastructure is their integration into national priorities. Data centers no longer just provide cloud storage. They absorb entire power allocations, reshape regional water usage, and alter local labor markets. In parts of Virginia, Oregon, and Iowa, electricity regulators admit that hyperscale operators have the leverage to set grid priorities. In Ireland, regulators had to pause approvals for new centers because national consumption was tilting toward AI demand. That kind of influence used to belong only to states.
There is also the geopolitical angle. For the Gulf states, sovereign wealth is being used to attract hyperscale construction in the desert. The United Arab Emirates and Saudi Arabia are not just financing these facilities. They are demanding partnerships that embed AI development within their national strategies. In exchange for capital and energy guarantees, they expect ownership stakes, model access, and alignment with their policy goals. This is not outsourcing. It is a new kind of alliance between corporate and sovereign power.
The precedent is worth noting. During the oil age, pipelines and refineries were built with heavy state involvement, but operated by private majors like Exxon and BP. Those companies often wielded influence equal to the governments themselves. The backlash shaped global politics for decades, from nationalizations in the Middle East to energy crises in the West. With AI data centers, the script may repeat. The players are different, but the dynamic is the same. Whoever owns the capacity dictates the leverage.
Another sign of sovereignty is the way these companies lobby. The cloud giants are no longer asking regulators for permission. They are drafting legislation, writing zoning frameworks, and designing environmental exceptions. In many capitals, their lobbying spend now rivals or surpasses traditional industries like energy and defense. That spend is not about short-term profit. It is about ensuring that the rules of the AI infrastructure era are written with their interests in mind.
And then there is secrecy. The largest projects are often hidden behind shell companies, non-disclosure agreements, and vague references to enterprise tenants. Local governments sometimes do not even know which models will be trained in the facilities they host. That opacity creates tension. Citizens see water tables dropping, power prices climbing, and traffic rerouted for construction, yet the operators remain untouchable. Once again, this is not how ordinary corporations behave. It is how states project quiet authority.
What this means is that the data center itself has become the geopolitical unit of analysis. When analysts map the future of AI, they no longer just track algorithms or model releases. They track clusters, Northern Virginia, Oregon's river valleys, Singapore's industrial parks, the deserts of the Gulf. Each of these sites is a node where sovereignty is contested and where the rules of the next decade will be decided.
To bring it back to the pattern, when infrastructure reaches this scale, it stops being invisible. Railroads created empires. Pipelines shaped wars. Telecom networks altered the balance of intelligence and espionage. Data centers are doing the same, only with the added twist that they are run by corporations, not governments. That hybrid status, part business, part state, will define the conflicts of the next decade.
Which brings us to the model we will use for the rest of this episode. The race for AI infrastructure comes down to 4 choke points: compute, energy, land, capital. Each is a battleground in its own right, each is scarce, strategic, and contested, and each is controlled by a handful of players with the power to set the pace for everyone else.
In the next segment, we will break down those 4 choke points. We will show how each one operates, who controls it today, and what moves are being made to shift the balance. Understanding those bottlenecks is the key to seeing who is really ahead in this race and who is already locked out. When you zoom out, the entire AI race can be simplified into 4 choke points: compute, energy, land, and capital. These are the levers that decide who scales, who stalls, and who dominates. Think of them as the 4 gates of the new economy. If you cannot pass through all 4, you cannot compete.
Let's start with compute, the silicon itself. Without chips, everything else is just ambition. Nvidia holds more than 80% of the AI accelerator market. Its H100 and B200 series are the gold standard for training large models. Taiwan's TSMC manufactures the majority of the most advanced wafers that make those chips possible, and that concentration is dangerous. If Taiwan is disrupted, global compute capacity collapses overnight. That is why the United States is pouring tens of billions into fabs in Arizona, Ohio, and Texas. But these projects take 3 to 5 years to complete. Until then, every country is effectively hostage to a handful of suppliers.
China is playing survival. Locked out of the latest Western chips, it is stockpiling older generation silicon and redesigning its software stacks to squeeze more efficiency out of what it can access. Domestic players like SMIC and Biren are racing to close the gap. Huawei is pushing new GPU lines tuned for local AI workloads. It is not parity yet, but the pattern is clear: survive now, catch up later, dominate if possible.
History offers the parallel. In the Cold War, whoever controlled uranium enrichment controlled the escalation of nuclear arms. Today, whoever controls chip fabrication controls the pace of AI. You cannot shortcut it. You cannot fake it. If you lose the node, you lose the race.
But chips alone are useless without power. Energy is the second choke point. A single hyperscale AI data center can draw more electricity than a mid-sized city. The United States has an advantage with its nuclear fleet and abundant renewables in Texas and the Pacific Northwest. Europe struggles with energy fragility after the war in Ukraine. The Gulf states are using sovereign wealth to build nuclear and solar capacity in parallel, aiming to become energy exporters for the AI age. India is lining up massive solar projects and a growing nuclear base to attract data center investment. Whoever can secure stable, long-term energy contracts is not just powering servers, they are buying competitive advantage.
Land is the third choke point. It might sound simple, but the right plots are scarce. Hyperscale centers need flat terrain, huge footprints, direct access to high-voltage transmission, abundant cooling water, and proximity to major fiber backbones. Northern Virginia is already saturated. The Netherlands has paused new permits. Singapore has capped growth. That is why operators are quietly acquiring rural land in secondary markets years before construction begins. Those who wait until demand spikes will find the best sites gone and the costs unbearable.
Once again, the past rhymes. In the railroad age, the first to secure land rights for tracks and stations created economic dynasties. In the oil age, control of pipeline corridors set the balance of power. The same is happening now. The best AI sites will become entrenched assets, and latecomers will be locked out.
The fourth choke point is capital. None of this happens without money. Not millions, tens of billions. Sovereign wealth funds, trillion-dollar tech giants, and national subsidies are financing the largest projects. The United States has the advantage of deep capital markets and federal subsidies. The Gulf states are investing to diversify beyond oil. China mobilizes through state banks and guided funds able to flood resources into priority sectors overnight. Without deep, resilient capital, even the best plans collapse before they begin.
These four choke points: compute, energy, land, and capital, are the framework we will use to decode the race. Miss one and you stall. Secure all four and you not only compete, you dominate. In the next segment, we will drill into compute and why Nvidia's speed breakthrough has triggered both optimism and anxiety across the AI landscape.
The biggest story in AI compute is speed. Nvidia's new Jet Nematron breakthrough made large models 53 times faster and cut running costs by more than 90%. Think about it this way. If training a model used to feel like crossing the ocean in a sailboat, it now feels like taking a jet across the sky. What once cost millions can now be done for thousands. For the industry, it is like flipping a switch from scarcity to abundance.
The technology behind it is called post-NAS. It changes how models process information, making them much more efficient without losing accuracy. For most people, the details are invisible, but the effect is clear. A model that used to take weeks and massive clusters of machines can now run on a smaller setup in days. That changes who can compete. Universities, startups, and even small labs now have access to computing power that was once out of reach.
I spoke with one founder who put it this way. Last year, they spent almost their entire budget just to train a single large model. This year, thanks to Nvidia's upgrade, they are training 3 models in parallel on the same budget and timeline. For them, the breakthrough is not just about faster chips, it is about survival. Without this leap, their company would have folded. With it, they have a chance to grow.
For Nvidia, the win is even bigger. By making compute cheap, they expand their market to new frontiers. Cars, phones, robots, even small edge devices can now run advanced models locally. That locks in Nvidia's position at the center of the ecosystem. Customers may be saving money, but they are also becoming more dependent on Nvidia's roadmap.
And here is where the paradox appears. Abundance does not mean freedom. Even if chips are faster and cheaper, they still need electricity, cooling, land, and capital. The bottleneck simply moves. Scarcity shifts from silicon to power, from the price of chips to the cost of keeping them running. Nations understand this, which is why compute is still treated as a security issue rather than just a business expense.
We saw the same thing in the oil age. New drilling made oil cheap and plentiful, but bottlenecks shifted to refineries, pipelines, and shipping lanes. The lesson is simple. Abundance in one place always creates pressure in another.
Nvidia knows this better than anyone. They do not just sell chips, they sell the future. When they launch a new line like Blackwell Ultra, they pair it with the promise of the next one, Rubin, even before it exists. That shapes buying decisions now. Many companies choose to wait, others rush to buy in before supply disappears. Either way, they stay locked into Nvidia's orbit.
That is what I call roadmap warfare. By announcing the next breakthrough early, Nvidia freezes competitors and locks in customers. The market stops moving on its own schedule and starts moving on Nvidia's. It is a subtle but powerful way to control the pace of the entire industry.
Export bans aimed at limiting China only add to that effect. Scarcity increases urgency. Urgency locks in orders. And once Nvidia's roadmap is public, customers feel they cannot afford to look elsewhere. Faster chips may feel liberating, but in reality, they tighten the grip of a single company.
So here's the abundance paradox. Compute looks cheaper and more available than ever, but the real power still sits with those who control the bottlenecks that speed cannot erase: energy, land, capital, and the roadmap itself.
Which brings us to the shadows. While Nvidia dominates the spotlight, other players are moving in less visible ways. In the next segment, we explore CoreWeave and the rise of shadow markets that treat compute not as infrastructure, but as contraband.
While Nvidia dominates the spotlight, another story has been unfolding in the shadows. CoreWeave, a company that started as a crypto miner just a few years ago, has turned itself into one of the most powerful GPU suppliers in the world. From a side hustle in digital coins to a $12 billion empire leasing graphics processors directly to AI labs. This is one of the fastest pivots in tech history, and it tells us something important. Compute is not only about innovation, it is also about timing, speed, and the willingness to operate in gray zones.
CoreWeave took a resource that was once considered wasted capacity and turned it into a strategic advantage. When crypto markets crashed, they had racks of GPUs sitting idle. Instead of selling them off, they retooled those machines to serve the sudden surge of demand from AI developers. The gamble worked. While hyperscalers like Amazon and Google had long procurement cycles, CoreWeave offered immediate access. Speed became their edge, and clients were willing to pay premiums to secure hardware without waiting in line.
The growth has been astonishing. Partnerships with Nvidia gave them priority access to chips that others could not get. Contracts with Microsoft and OpenAI made them a critical supplier of on-demand compute. And private equity money flowed in, turning what was once a scrappy side project into a serious player. By 2025, CoreWeave was not just competing. It was operating as a sovereign-scale provider in its own right.
What is interesting here is the pattern. Every technological boom creates shadow players. In the age of oil, there were traders who made fortunes moving barrels outside official markets. In the early internet, there were hosting companies that built fortunes serving adult content and gaming before mainstream adoption. CoreWeave fits the same mold. An outsider that capitalized on demand others could not meet, and in doing so became essential to the system itself.
But CoreWeave is only one part of the shadow economy around compute. Across Asia and Eastern Europe, a parallel market is emerging. GPU smuggling, shell companies buying chips in bulk, hardware routed through third countries to evade sanctions. The numbers are hard to track, but analysts estimate that billions of dollars worth of advanced processors have already slipped into networks that were officially cut off. These chips are training models outside the reach of regulators, governments, or oversight.
In China, entire clusters have been pieced together using hardware that was never supposed to reach its borders. Some of it comes through Hong Kong, some of it through Southeast Asia, some of it through networks of brokers who specialize in sanction evasion. The end result is the same. What looks like control on paper is porous in practice. Compute leaks, and once it leaks, it multiplies.
Even in the West, shadow markets thrive. Startups that cannot win contracts with cloud giants often resort to secondary markets where they rent capacity from intermediaries. These deals may involve outdated chips or shared clusters, but for many companies, it is the only way to experiment and iterate. The official cloud market may look clean and structured, but beneath it lies a messy web of rentals, subleases, and backroom deals that look more like commodities trading than enterprise computing.
This is why compute today resembles oil in the 20th century. Official supply chains, shadow flows, smuggling routes, speculation, and manipulation. And just like oil, control is never absolute. The more valuable the resource, the more incentive there is to move it off the books. What regulators call illegal, markets often call opportunity. And the result is a system where power is not only concentrated in hyperscale campuses, but also dispersed through networks no one can fully see.
The consequence is clear. Shadow markets make control unstable. They introduce risks of espionage, sabotage, and strategic miscalculation. When you cannot see who has access to what, you cannot predict who might surge ahead. That uncertainty changes the race itself. In history, we saw black markets in uranium during the early nuclear age and in advanced electronics during the Cold War. Each time, the official players underestimated how fast the shadows could accelerate competition.
For investors and policymakers, the lesson is that CoreWeave and the shadows around it are not side stories. They are central to the dynamics of the AI race. The official numbers about chip supply and deployment are only part of the truth. The rest is hidden, fluid, and moving faster than the headlines.
And that brings us to the reckoning. Because even if compute becomes cheap and abundant, energy remains the silent constraint. Data centers cannot run without power, and the more shadows form around compute, the more pressure builds on energy grids everywhere. In the next segment, we will step into that tension, the reckoning of energy and the contrarian risks no one wants to talk about. Every arms race eventually meets a wall. For AI, that wall is energy. You can build bigger clusters, ship in more chips, and wire more fiber, but none of it matters if the grid cannot keep up. Energy is the silent constraint, and we are already starting to see the cracks.
One hyperscale AI campus can draw as much power as a medium-sized city. And unlike seasonal demand, AI load never rests. Once a model is deployed, it runs 24 hours a day, 7 days a week. In Ireland, regulators paused new data center approvals because the grid was too strained. In Texas, blackouts raised questions about whether the state can handle both crypto and AI at once. Even the Pacific Northwest, famous for cheap hydro, is running out of spare capacity.
This is the energy reckoning. Compute is scaling faster than power supply. Governments are scrambling. Some are reviving nuclear plants mothballed decades ago. Others are signing 20-year contracts for wind and solar. And some are adding tariffs to discourage energy-hungry projects from clustering in fragile grids. The competition is no longer about the lowest price per kilowatt. It is about who can guarantee steady supply in a crisis.
History is repeating. In the Industrial Revolution, coal decided where factories were built. In the oil age, pipelines set the borders of empires. Today, grid stability is drawing the new map of intelligence. The faster AI expands, the faster these stress points appear. Whoever locks down the most reliable energy sources will hold the advantage for decades.
Some nations see this clearly. Saudi Arabia and the UAE are building new nuclear plants and the world's largest solar farms. They are not just planning to meet domestic demand. They want to become exporters of electricity for the AI century. If they succeed, they will not only sell oil, they will sell electrons, the lifeblood of intelligence.
But energy is only half the reckoning. The other half is risk. The scenarios most people do not want to talk about because they reveal just how fragile the system is. Imagine a government order that diverts compute to the military. The United States did this in World War II when civilian car factories were seized to build tanks and planes. It could happen again, only this time with data centers.
Or think about sabotage. In 2010, the Stuxnet virus targeted Iranian nuclear systems, proving that even the most guarded infrastructure can be attacked through software. If that could happen to centrifuges, why not to AI clusters? Compromised chips in black markets or malware in supply chains could disable systems when they are needed most.
And the precedent for financial disruption is also there. During the Cold War, covert networks traded restricted electronics, often slipping them into rival labs. Today, shadow GPU markets could become the same. Hardware leaks into clusters you cannot track, and once it is inside, you cannot be sure it is safe. Every black market makes official control weaker.
Data is another blind spot. Training sets may already be near saturation. That means new models are being trained on recycled or low-quality inputs. In a crisis, these blind spots will surface. A model that learned from perfect conditions might fail in volatile markets. A model built on open internet data might break under disinformation attacks. Compute and energy cannot fix brittle data.
Put these risks together and the picture is sobering. Energy shortages, government seizures, sabotage, and data blind spots. None of them are science fiction. They have all happened in other industries. And history tells us they will happen again here. The question is not if, it is when.
The winners in this phase are not just the fastest builders. They are the most resilient planners. The ones who design for sabotage, who stockpile reliable energy, who build verifiable data pipelines. They may not win headlines, but they will survive shocks. And in a race like this, resilience decides the finish line.
Which brings us to the final act. We have seen the doctrine, the choke points, the breakthroughs, the shadows, and the reckoning. What remains is the investor lens: who profits, who pays, and how to read the signals that will decide the balance of power. Every arms race creates winners and losers. The AI infrastructure race is no different. If you want to see where the profits will flow, you need to follow the bottlenecks. Compute, energy, land, and capital decide who moves forward and who stalls. But inside those choke points are players that stand to gain the most.
Start with energy. Utilities that control nuclear fleets, hydroelectric dams, or large renewable portfolios are sitting in the sweet spot. Their contracts with AI operators are not short-term. They are often 20-year agreements that guarantee steady revenue. In practice, this makes them look less like utilities and more like long-term technology partners. Companies in Canada, the Nordics, and the American Midwest have already locked in deals that will feed cash flow for decades.
Sovereign energy havens also stand out. The Gulf states are using their capital reserves to secure a second act beyond oil. They are not just exporting barrels. They are building nuclear plants, massive solar farms, and even entire smart cities designed around AI hosting. Their pitch is simple: bring your clusters here, we will give you energy, land, and stability. If they succeed, they turn energy into leverage for the AI century.
Then there are the picks and shovels. In every gold rush, the companies that sold tools often outperformed the miners. The same logic applies here. Transformer suppliers, high-voltage cable makers, cooling system designers, and storage providers all benefit from the scale-out. They are not tied to one model or one data center. They sell into every build. If you want a diversified way to play the infrastructure boom, this is it.
Hardware and software focused on efficiency also matter. Abundant compute does not erase costs, it simply shifts them. That creates opportunity for chip designers working on specialized processors, for teams building pruning and distillation tools, and for companies that make inference cheaper at scale. In markets where power prices are high, these efficiency gains are the difference between profit and failure.
The pattern here echoes history. In the shipping boom of the 19th century, fortunes were made not just by the shipbuilders, but also by the companies that supplied ropes, sails, and insurance. In the oil age, pipelines and tanker makers often outperformed drillers. The lesson is consistent. Infrastructure races reward those who support the system, not just those at the center of the spotlight.
Now let us talk about the losers. Energy-poor regions are already at risk. California struggles with fragile grids and rising costs. Germany closed much of its nuclear base and depends on imports. Japan has similar weaknesses. These regions will find it difficult to host frontier-scale AI without heavy subsidies or foreign partnerships. For investors, the warning is clear. Growth in AI demand does not guarantee profit if the local grid cannot support it.
Another category under pressure is the brute force AI lab. Companies that bet on scaling models endlessly without focusing on efficiency will struggle. As costs shift to power and land, leaner players who can achieve similar performance with smaller footprints will win. Investors should be careful of firms that promise scale without showing how they manage efficiency.
Mid-tier colocation providers also face a squeeze. Without direct control over land or power, they depend on scraps from the big cloud operators. As demand surges, the giants sign long-term exclusive deals. That leaves smaller providers with higher costs, thinner margins, and less leverage. Some may survive by specializing in niche markets, but many will be pushed out.
The cascading effects extend beyond the obvious. Finance will adapt by securitizing power purchase agreements the way mortgages or bonds were packaged in the past. Real estate markets will shift as land near substations and water sources becomes more valuable than city centers. Geopolitics will respond with new alliances, maybe even an OPEC for electrons. These ripple effects will touch every industry, not just technology.
And that is the systemic view investors should remember. This is not only a technology story, It is an infrastructure story. The value is not just in chips or models. It is in who secures the inputs and controls the bottlenecks. Those who own the factories of intelligence, whether energy grids, data corridors, or capital pools, will collect rent for decades.
Which brings us to the edge of the finish line. We have walked through compute, energy, land, and capital. We have traced the rise of data centers as sovereigns, Nvidia's speed wars, CoreWeave's shadow moves, and the energy reckoning. The final step is to tie it all together. To bring the story home with a summary, a call to action, and a clear reminder of the stakes. That is where we go in the last segment.
We have covered a lot in this episode. We unpacked the 4 choke points of AI infrastructure, the rise of data centers as sovereigns, the breakthroughs in compute speed, the shadows around CoreWeave, and the reckoning that comes when energy and risk collide. Together, these stories show one truth. Control of compute, energy, land, and capital will decide the balance of power in the age of intelligence.
If this episode gave you the infrastructure lens, you should also listen to the AI infrastructure arms race, geopolitical and economic power shifts. It reveals how the United States, China, Europe, and the Gulf are aligning these choke points into full national strategies.
And for the other side of the story, check out the AI interface wars, how agents, models, and ecosystems are redrawing the digital map. That one dives into OpenAI, Meta, Google, and Alibaba, and how they are racing to control the interface layer that is replacing search, apps, and even trust itself.
Together, these episodes connect the dots. Infrastructure is the foundation. Interfaces are the front line. Both will decide who leads and who follows in the AI century. Subscribe to AI Frontier AI on Spotify or Apple Podcasts. Follow us on X to track the biggest AI stories shaping the world. Share this episode with a friend and help us reach 10,000 downloads as we build the smartest AI community online. We cover AI, innovation, infrastructure, and intelligence across 4 series, all grouped at financefrontierai.com. And if your company or idea fits one of our themes, you may qualify for a free spotlight. Just head to the pitch page and take a look.
Sign up for the 10x Edge, our weekly drop of AI business ideas you can actually use. Each one is tied to a real breakthrough, new tools, models, and trends we catch early. If you are building with AI, this is where your edge begins, only at financefrontierai.com. This podcast is for educational purposes only. It is not financial advice, legal advice, or development guidance. Always verify before you act, build, or invest.
The AI landscape is changing fast. Benchmarks evolve, regulations shift, and what is true today may not hold tomorrow. Use every insight here as a lens, not a conclusion.
Today's music, including our intro and outro track Night Runner by Audionautics, is licensed under the YouTube Audio Library license.
Copyright 2025, Finance Frontier AI. All rights reserved. Reproduction, distribution, or transmission of this episode's content without written permission is strictly prohibited. Thanks for listening, and we will see you next time.